Hello, Patrick Walchuk here, and as we do every month, we're going to present you with a multi-unit residential property that's sold, provide you with the numbers and a little breakdown of the numbers so you can see what's happening in the market. So we'll open it up, and what we have for you this month is that there was a triplex that sold in the south end of Ottawa, and it was a legal triplex. I was actually in this property a number of years ago, and it was currently listed for, call it $800,000, and it sold for $755,000. Now, it had a scheduled rental income of call it $58,000, and an effective rental income when you deduct for vacancy and bad debt of about $56,000. The operating expenses on it were almost $19,000, and when you add in management fees and maintenance fees, the total operating expenses on this property were about $24,000, giving us a net operating income of almost $32,000. So now that we got that, we can calculate a cap rate, and the cap on this is a little over 4%, and that's what I find surprising about this property is you got a very low cap rate, so it's sold kind of high. The operating expense ratio, that's a little on the high side as well. It's not surprising. I mean, I know where these buildings are, and they're older buildings, so they typically require more maintenance, but it's not, ideal. Anyhow, it's sold for 14 times the gross, 24 times the net. So if you had a 40% down payment, which equates to be a little over $300,000. It gives you a mortgage of $453,000, and the annual debt service on that mortgage is, call it $32,000. So you basically break even on the property. You have a cash flow, positive cash flow of $52, and it's a break even. So you invest, close to $250,000 so you can break even on the property. That's what happened on this property here. Thanks for watching.